Welcome back to Golden Rule Radio. Last week we said that we thought gold was probably turning around here, and on Thursday, I have to say it dropped down into and touched the 50% level if you look way back at a longer term chart. It bounced right off of that level, and now we're holding above it nicely. And I'll go ahead and put it out there, Miles. I don't know what your thoughts are today because I didn't get to read your notes, but I'll go ahead and put it out there that I think gold is turning around here. And come August 1st, you better be in.
You know, Robert, I'm about 50-50 in agreement with you, which I know is a cop-out answer, but I got to be honest, right?
Yeah, so we want honesty.
Coming into that 12-12, I mean, we've been talking 12-12 for months now, so to see that actually hit, the long-term 50%, the short-term 618 fib, all lining up at the same level, and happening in that June-July seasonal bottom. So that happened the day that we put our show out last week on Thursday. I think we got down to 12.11 and change, bounced right back up. We got back above 12.30, and we're sitting here in the high 12.20s, low 12.30s here. So there's a couple different directions we could go. Frankly, we need to get back up all the way to about 12.85 and above, I would say, to strongly argue that we're making that next push up, or we could continue down to the 1185, the 786 fib, which would be a 3 drives Elliott wave pattern down with divergence, which is going to look real nice in the long term. Plus, that puts us to that first pullback after we came off the December lows in 2016. We had a pullback a month or so later, down at around 1175, 1180 that we've never come back to and touched. So I do like first moves down after you've changed direction, or first moves up on the downside after you've changed direction, that we've never come to. So that's certainly a possibility in the next couple weeks, although if we get up another 10, 20 bucks this week, I think the sky's the limit, and we could be pushing up towards the 1400 level, maybe even sooner than I thought we would.
I was going to add in the long-term 50% level that we're seeing gold bounce off of on Thursday is very similar to what the dollar index charts have been showing with 50% levels also. And so maybe there's something with that.
Yeah, just on the reverse side, because it's doing the same thing. You know, you look at the dollar, you've got divergence coming up.
Well, you're also talking about the first move back up, or back down, like that 1180 number you mentioned with gold. We saw the same thing happen when Trump was being elected on election night. That was kind of that first little pinpoint prick that you see on the charts right at election day, night, up into the 1337 level, which became kind of upper headwind resistance. So there is something to read into this. We're not just kind of making this up in the sky. There is reason for this to happen and the numbers to follow a certain pattern.
Sure, and the dollar definitely saw that headwind resistance. You know, back in June, we got to about 95.5 on the dollar, which I think was that 50% level. We attempted to retest it here in the last week or so and failed. We only got to just below that, or we closed just below that. So we're seeing divergence on the upside. The dollar's now back down to 94.1 with some of the issues in the Trump tariffs that everybody's been talking about, and maybe some combating against the U.S. dollar, or a turnaround in the euro, which you talked about a month or two ago, that we should see the euro find bottom and turn around. If the dollar starts coming back down, because it really needs to get back up to that 97, 98 level. So if we get back down to around 92, 93 on the dollar in the next couple weeks, I think we're going to resume the water slide.
Well, it makes me excited because August is right here around the corner. So it's a few days away from that, a few trading days.
Yeah, people tend to put the campers away, start buying school supplies again, and start thinking about retirement accounts as opposed to spending money. So you do see investments pick up here starting in August, September.
Yeah, so you've heard us talk about the seasonal pattern, and I think we're going to run right into that. So gold needed to hold in this level. It could come down just a little bit more, I'd say, but it needs to turn around in this range. And with the seasonal strength coming in the next couple weeks, if not next week, then I'm excited about it.
So moving over to the white metals quickly, silver did come down and bounce that 786 fib we talked about last week. It's back up into that long-term trading channel. So we have had a break or two below that, but for the most part, it's sitting in that compressing wedge down at the bottom and still under 16 bucks an ounce. So silver remains a pretty strong opportunity in the precious metals market. And that gold to silver ratio is actually back below 80. I think we're at about 79.8. So silver continue to be a place to look for at least the medium term as an opportunity to get out of some ounces of silver down the road into free ounces of gold using our ratio strategy.
If you're interested in what he's talking about with the ratio strategy, you can call us and we can explain it to you.
And finally, platinum, I would argue, needs to push above and stay above about 862. You know, it's similar to gold in that it's showing 2 of possibly 3 drives down with divergence. If gold pushes down one more time, you know, that 1185, 1175 number we were talking about a few minutes ago, then yeah, I think platinum could follow suit and test the 2008 bottom around 753. So we're talking about a price bottom that we haven't hit in 10 years. I would imagine there's quite a few standing orders at that price that have maybe been sitting there for years just in case. So 752, 753 on the platinum side, I think would be a pretty definite bottom, or we should see a pretty aggressive bounce there. And then finally, palladium, unlike everything else, has actually jumped up about 80 bucks this week. So palladium seems to be following suit with some of the other commodity industrial metals. You know, copper has jumped up. Granted, it was down like 19-20% between mid-June and mid-July. So had a pretty rough month there. U.S. steel futures were down as much as 33% from March to May. Corn was down 18.5% May to July. Soybeans down 24% March to July. So I think some of the tariff talk is helping short-term U.S. producers, making the assumption that we're going to be pulling some steel and aluminum and other things out of our own dirt as opposed to importing them. And we've seen some rebounds in some of those commodity prices. I don't know if that's going to hold long term, but certainly short term, I know some farmer clients of mine who are happy soybean corn prices are inching back up slightly.
Well, thanks, Miles. That was good. As always, thanks for listening. You can follow us on Twitter at ICA Gold. You can like us on Facebook. You can click the subscribe button below. You can call us at 800-525-9556 or find more information at McAlvany.com. Thanks for listening. Have a good week.